Ladies and gentlemen, welcome back to the Crypto News Podcast. We are buzzing as always. My guest is coming in hot today with a great setup. I love when my guest comes in with a great setup. It reminds me of when I'm at home, but unfortunately, I'm not at home right now. I'm in Buenos Aires, still loving life here. By the time this episode airs, Dev Connect will be almost concluded, which I can't wait. It's going to be an absolute banger and super pumped to meet a bunch of you. Today's guest is also Black T-shirt gang and AirPod Max gang as well. We just called each other before the show and said, let's just match today. Except I'm wearing a Nike hat because if I didn't have a hat, I'd look like Ronald McDonald. But otherwise, we are buzzing. Time for the intro. Today's guest, one and only Ben Nadareski today, CEO and co-founder of Solstice Labs, where he and the team are redefining how yield is generated in DeFi. A very trendy topic right now. Everyone's trying to get yield. Everyone's always trying to get yield, and they're doing it on Sol. It's backed by Deus X Capital, and Solstice Labs pioneers permissionless institutional grade strategies on Solana, making sophisticated trading approaches and sustainable yields accessible to everyone. Previously, he led the first crypto derivative trades with global banks as VP of global trading at Galaxy Digital. Did a whole bunch of other stuff as well. Crazy bio. Can't wait to get into this. Ben, welcome to the show, my friend. Pumped to have you on. How you doing this lovely afternoon?
Doing well, Matt. So happy to be here.
Pumped to have you. Let's jump right into it. Present day Sol. Before we get into Solstice, before we get into everything you guys are doing, what's going on with Sol right now? A little bit of slander on the TL. I haven't really seen this since, 2022, maybe early 2023, before the classic sort of Ansem calls when it was, $8, $10, when Ansem was like, time to hammer Sol. I really haven't seen this kind of sentiment on Sol. As always, I always tell everyone when I have, a coin or two, I still own a solid amount of Sol. I'm still long Sol. I'm still bullish Sol. I still love Sol. It's been the ecosystem that's onboarded everyone into crypto. But you're the Sol expert, not me. What the heck is going on with Sol right now?
Listen, if you're ever doing something important or relevant, you're always met with headwinds. And Sol's next evolution that we're seeing right now is very much defining what's now rebranded from the foundation level as internet capital markets. It's a massive foundational institutional play for getting not only the TradFi ecosystem, yield-bearing products, but a lot of that core financial infrastructure on chain. And that's starting to succeed. You're starting to see a lot of institutions come over. The ETF launches. You're starting to see all of this type of institutional activity flow. And when that happens, well, a lot of the ecosystem that's not directly part of that Solana ecosystem starts to say, well, wait a minute, guys, you guys aren't the players, we are. And it starts to get into that tribal boundary fights that we haven't seen for probably about 4 or 5 years, really in full flare now. So all I would say on that note is that it's nothing new. And I think this is just the headwinds of Solana starting to capture some of that institutional market share, which traditionally was predominantly on the ETH side. And so I think a lot of players are starting to see, wait a minute, maybe the home for institutional activity on finance and the future of finance is actually, more geared towards Solana, while ETH is better geared towards several other applications. But again, I'm an ETH lover as well, but Solana maxi at heart. So I'll say it that way, the high level, because in general, really also the other comment to obviously mention is October 10th and things that have happened since then. So you saw a massive shootout of confidence in the market after October 10th, largest crypto liquidation event in history. These things happen in crypto. However, this was a very significant one, and that kind of triggered a bit of a sell-off that triggered a lot of people feeling skirmish about what was happening in the market, caused people to move away from a lot of their core holdings. And, those type of confidence killers in the market obviously create fear and anxiety in a lot of different scenarios, which I think is where some of that FUD may be coming from. But in my opinion, it's short-lived and not too relevant.
Yeah, well said there. I mean, that was a pretty big bull statement, and I agree with everything you said. One, let's not be super, we're going to be super bully on Solana this episode. Let's get real. But we'll talk about just a couple of the negs here. The inflation aspect. I don't know Solana as well as you, obviously. Is there a world where we can stop the Sol inflation and stop the amount of new Sol that comes into the flow? Isn't Mert and the team working on this right now? Am I just completely at to lunch there, or is this something
they are? Yeah, look, there was some of the proposals that was originally rejected a while back for some of the proposal changes for how inflationary aspects of Solana get distributed. And the bottom line, I think at a high level, if I were to just answer the inflationary aspect shortly, is that Solana is going through the growth phase that Ethereum and other chains experienced several years ago, we're going through that phase right now, right? You have to understand Solana is a much newer chain comparatively to Ethereum. When you get to that level of kind of that explosive growth path, which we're starting to see with a lot of the stablecoin apps, yield apps, DeFi apps in general, that period is when lots more of the same metrics that were used in the old model are being used in the current growth stage model. And so you're going to start to see, I think, some of those policies come down on the inflationary side. And it's just a matter of market timing with it. This is not something that will continue forever. You'll see the community, start to put into votes, deflationary aspects to ensure that Solana isn't just printing money like the Fed. And as long as that doesn't happen, I think we'll be in good shape here.
Okay, I like it. Any other Solana growth catalyst, Ben, before we move on? Anything to look forward to? Anything to be a little spooked out about? We're not going to get into price predictions or anything like that, but is it still just like good bullish on Solana moving forward?
Absolutely. So we, as a background, when we chose to build Solstice on a chain, I obviously have been around the ecosystem since 2013, but the focus for building this on Solana was very targeted. When we chose to target that and the initial build, the initial company came together, stablecoins on Solana were only around the 2 billion, 3 billion mark of liquidity. Now they're over 13, 14 billion as of right now on Solana. And I preceded that by saying, okay, it's a combination effort. The first is you see a narrative change from the foundation itself, pivoting the whole metric to, hey, we are internet capital markets, right? It's a one-stop shop for yield. It's a one-stop shop it's a one yield venue effectively, where you get one venue, cross-chain liquidity, not fragmented L2s, not fragmented liquidity pools, multiple periods of interoperability between all these different applications working hands-on with each other. It's just primed to be the center of DeFi. It's been DeFi specifically. And I don't mean all blockchain applications. Like, I think Ethereum's better positioned for some of the more exploratory aspects and a lot of the more creativity around smart contract development. But when you get to the core financial applications, it's not just the hardware performance of the Solana network that puts it on top. It's the combination of the fact that you have so many applications talking to each other in such a seamless, congruent way. This is what a financial system of the future would look like. And when you see that kind of ahead of time, then you start to see, okay, well, there's a reason why tens of billions of dollars are coming on chain. There's a reason why a lot of development partners are choosing this as their L1. There's a reason why there's more and more net new capital coming into crypto that's entering first through Solana. There's a reason why there's the most active wallet networks, or most active wallets out of any L1 in Solana. The dev community is probably the most explosive in the space by far.
Yeah,
you're seeing on-chain revenues peak even above chains with way higher TVL because of the fact that these applications are actually driving on-chain revenues, not just R&D projects. Like all of the metrics, when you look at it from a quantitative analysis, whether that's from a hardware performance or on-chain revenue performance, as well as all the headline news, everything points towards Solana, in my opinion, for the DeFi applications of the future.
Well said. You're on a roll here. Jeez, I feel like this is gonna be a banger of an epic. I can already tell. Let's get into Solstice and the yield engine. Going on your website, great website by the way, but very clean, and it hits you right on the landing page as any good website should. 273 mil present day on the TVL and 16.2% APY. Your whole pitch is seamless, fully integrated yield, permissionless institutional yields. Correct me if I'm wrong here, but this is just snag the token and boom, you're off. No looping, no farming, none of the crazy nonsensical bullshit that we have to do every day as crypto degens to maximize your yield. You guys take care of all the bullshit and the consumers just give you money. Is that how it works?
Yeah, let me paint the picture for you here. Where this all came from is there's always been these very kind of creative, complex ways to generate yields in DeFi. And we at Deus X, when we were working on the prop fund, we had a bunch of different basis trade, delta neutral plays out in the market. I've myself been a degen on the backside farming a lot of these really complex things. The bottom line is that those were not set up for the general public. And what I mean by that is there's a massive learning curve, a high watermark in order to ensure wallet safety, security, trust and protocols, the whole 9 yards that you need to go through, right? And so that was a clear kind of value proposition in order to create institutional DeFi, which is what I truly believe Solstice is. One of the only applications. There's a handful of applications out there that are institutional DeFi, but a lot of people throw that term around loosely. What I mean by institutional DeFi is a system that allows for both retail and institutions to participate on the same level playing field. And so some of these applications came out with delta neutral yields being passed through, and we looked at a lot of these protocols, and it was a bit of a black box. It was some of the they ice broke a lot of the applications into this type of yield generation strat. But we said, okay, let's really focus on what matters to the end client about the transparency, trust, risk parameters, etc. So we launched a protocol that has two very simple components. We issue a stablecoin that's backed 1-to-1 to the US dollar and backed by USDC and USDT, technically making it a synthetic, but there's reasons for that in a minute I'll talk to. So it's a simple stablecoin, USX, and our yield vault. If you own USX, one-click yield to get access to our delta neutral trading strategy, which has yielded 16% in the last 12 months, 21.5% in 2024. And it functions on doing an execution of 3 different trades on the back end. And that's funding rate arbitrage across multiple different pairs of assets, including longer tail assets where there's liquidity depth on SEX exchanges.
Wow.
We do hedge staking, which is effectively the funding arb trade while staking the underlying spot asset, and tokenized treasury allocations. So having the hedge staking and the tokenized treasury allocations is important for when funding rates start to decrease and are in lower territories, so that way you at least have a flat baseline yield. So what this created was a system that whether if you have $5 or $50 million, you are accessing the same level of yield, you're accessing the same hedge fund type trading strategies on the back end. We have an institutional grade trading team on the back end, managing risk, ops, all of the different exchange, books on the accounting side. Anybody, kid in the Philippines with $5 on your wallet and a mobile phone, you access the same as a CEO of a bank in the US. You access that same level of yield and transparency. And that's what institutional DeFi means to me. It's building it in a way that's both permissionless and institutional grade on the back end that allows for, OTCs to come on in a net new capital sourcing way. So this is how we bring net new capital into the ecosystem and truly activate the retail ecosystem. Because that retail thing, this is the piece I'll finish with, the retail ecosystem specifically, this is why there's such a big market for this, right? In traditional finance, 55 to 65% of the assets there are yield generating assets in TradFi. In DeFi, it's about, in crypto in general, it's about 8 to 11%.
Wow.
So we still have a massive gap in the fact that the assets on chain, people are not participating in that yield, which is one of the major criticisms of a lot of the major stable coins that people are using. USDC, USDT. You're just making other companies rich.
Yeah.
Because you use their product for a core baseline, which should be a utility of just having a stable baseline asset pegged to the, traditional world. The yield on the back end should be democratized, and that's what Solstice enables.
Okay. You're on a feeder right now. Solana's base rate. This and in receiving the show notes from your team and then doing research on this was something where I was like, this is so front of mind. And I feel like finance folks like us think about, but unless you're reading up on it, you don't think about this. I've never even heard of the term Solana's base rate before, but every mature financial system literally has that base, yield or the risk-free yield. It's what we talk about every day is the Fed going to cut rates. It's like literally the thing that makes the world go round. But we don't talk about this for crypto. Like, what is the base rate of said ecosystem? We never talk about this. What was it you guys who coined this? Like, walk me through, just give me the whole TLDR on Solana's base rate, because this got me going when learning about this.
Yeah. So the original term that we adopted, base rate, came from obviously in TradFi the idea of a risk-free rate. Now, we never say risk-free because black swan events are all looming all over the place in our industry, unfortunately, still. But the bottom line is that a risk-free rate in TradFi just means that a rate that you can guarantee and secure for, which is effectively you're not taking any on-market directional risk exposure other than technically a credit counterparty risk to, for example, the US government for treasuries. So that risk-free rate of capital is effectively what you can borrow at, what you can get a stable yield at without taking on any directional risk. Now, in DeFi, that doesn't quite exist at all. So the closest thing is we can look at what's a natural reoccurring market dynamic. So the reason why we're able to generate what was 16% over the last 12 months and 21% in 2024, we're able to generate that yield because there's a natural market inefficiency in the funding rate arbitrage between the difference of spots and perp that you're able to execute on over and over again, because our markets are not as efficient as traditional finance markets are. Now, I've been talking about this for the last, 10 plus years in crypto. Basis is going to come down in the next 6 months. I've been told that for the last 4 to 5 years consistently, and it's just been not the case. It fluctuates, absolutely, but that natural market inefficiency becomes, if it's accessible to everyone without the hassle of accessing it, which is why we have a one-click yield system, then you're able to receive a base rate on a chain that allows you to have a risk-free rate. I'll call it in quotes. I always get yelled at by my CMO, Ryan. Never say risk-free in anything you say across the board. It's very important we don't say that, but that's what we call about a base rate. Because also the fund itself has a Sharpe ratio of 8. So if you're familiar with Sharpe ratios, the higher Sharpe ratio is the lower risk that you are. And a traditional hedge fund at a very successful rate is usually floating around a 1 Sharpe ratio. We have a massive Sharpe ratio because of the fact that we're non-directional. We're not taking any market risk when we go out there and do this because we're executing these trades that exist because of natural market inefficiencies. So all of that combined into a one-click yield to access that quote base rate is where the term comes from and how Solstice accesses it for all of its users.
How do you guys have a Sharpe rate of 8? That's never seen something that high.
Because we don't take any market directional risk. All
So
the
you guys just
positions are fully delta neutral.
Gotcha. So delta neutral on literally everything and just finding these little market inefficiencies, grabbing a shitload of yield, passing it back to the consumer. That's all it is.
Exactly. There's no directional price risk on any of the assets that we're trading the funding rate arbitrage on or taking nudging exposure on, because when you're having a spot position open as a short perp, whatever it might be, those positions net out on the delta exposure. So you're effectively neutral across all different positions at any given time in the market.
Wow. And for you guys to do this, you must be, I mean, the TVL speaks for itself. There's a lot of money in that TVL. Are you going outside of the Solana ecosystem in order to farm some of this value?
So this is where it gets interesting. So first I'll say on the core point that we were just talking about, the best example of why that sticks and a proof point to any listener that's skeptical of anything in that regard, take October 10th as one of the best case scenarios. This was weeks after we launched, so 2 weeks after we launched, quite literally. We look at what happened. We saw all of our users, nobody pulled out as far as redemption goes. Number 2, we had positive yield generation across the entire time frame, even weeks after, for the October 10th event. And why? Is because when the funding rate collapses, we shut the positions and we reopen when it comes back online, or when it comes back as far as the spread goes. And we also swap to treasuries in the time frame that the funding rate compresses to that. So you saw the use case, and also our core stablecoin USX, as the third point, is it did not fluctuate. It did not depeg. We had the max fluctuation of USX at the most volatile moment when crypto markets liquidated to the highest extent in history, 0.07% fluctuation. So that whole stability, that Sharpe ratio, the whole dynamic of what we've set up about institutional grade DeFi, the October 10th scenario was the perfect example of what that means to be institutional grade within the DeFi ecosystem. And that's what Solstice proved on Solana in that October 10th timeframe. Now, as far as going outside the ecosystem, we can think about it in 2 ways. So we can think about it in partner apps from the retail perspective, and we can think about it from net new capital on the institutional side. In order for Solana to grow, and in order for DeFi and crypto in general to grow, we need to continuously source net new capital that's outside of DeFi today and bring it in. And so we've had several institutional investors that come on board, because on the back end, we also are a licensed fund that institutions come on board with. They do all the KYC, AML onboarding procedures that you would expect, because that's what they need to participate in DeFi. What retail needs is just a permissionless one-click access, which is what we have.
Yeah.
But having both at the same time allows for that parity. So on the institutional side, we've gone out to several institutions that have never touched crypto or DeFi before in their life, and they've come on board for the first time via Solstice. And so we are actively sourcing net new capital from all types of institutional investors, asset managers, hedge funds, family offices, you name it, to come on board and participate in the DeFi side. And what's most exciting is the fact that we've set our structure up in a way that it's not just a stagnant investment. A hedge fund can come in, they invest their money, and what happens when they invest? They get their USX, it gets locked for EUSX at a minimum 7-day lockup, so it's liquid, but then they receive a liquid composable yield-bearing token that represents their yield that's being generated, EUSX. They can then take that EUSX and for the first time start to experience DeFi by putting that on borrow lend markets or looping that on Camino, or using USX across the PTYT systems on Exponent. You can start to do things in the DeFi ecosystem while you're generating that core yield. It's like investing in a fund, getting a receipt of that fund, and then
Yeah.
using that fund to get.
Go to
It's a
another fund.
great,
Yeah.
yeah, exactly. You can start to get accruative value as you earn your base rate. We encourage you to go earn a bunch more. So yeah, funding rates are going to fluctuate, and even right now, funding rates are pretty low. But as they grow and whatever, it's going to continuously be a fluctuating metric. Always earn your base rate, but then go earn up to what is now 20 to 30% yields on Camino and Exponent if you were to optimize on the DeFi side. So you can earn that accruative rate while still getting your, base rate on Solana at any given moment. And so sourcing outside the ecosystem, how we grow outside Solana, it's really on the institutional side first to get net new capital in and get that capital working within the DeFi ecosystem.
Guys, this is an absolute heater. Ben's on a roll right now. We got to take 38 seconds to cool down and rip a quick ad read, and we're going to get right back to the show with Ben. Huge shout out to Prime XBT, longtime friends and longtime sponsors of the Crypto News podcast. We love the team at Prime XBT as they offer a robust trading system for both beginners and professional traders. It doesn't matter if you're a rookie or a vet, you can easily design and customize your layouts and widgets to best fit your trading style. Prime XBT is also running an exclusive promo for the listeners of the Crypto News podcast. Use the promo code CryptoNews50. That's CryptoNews50, all one word, to receive 50% of your deposit credited to your trading account. Again, CryptoNews50 to receive 50% of your deposit credited to your trading account. Now back to the show with Ben. You just brought up some great ecosystem catalysts. I'm a big component in. We saw this in Ethereum with, heck, I can rip off 20 different DeFi primitive protocols. We saw early days Uniswap. We saw NFTs. In order for your ecosystem to grow, you need catalysts on the ecosystem. For the TradFi folks or just for the tech guys, I sort of give them the example, which isn't the greatest example, but I give them the example as a coding language like JavaScript or C++ or Node or any of those, and then the thousands of incredible websites and softwares and SaaSes that are built on top of those, except those things don't have a coin, right? It's a not-for-profit organization. That's sort of how it works in crypto. In order for the ecosystem to grow, Ben talked about, when he started the show, he talked about stable coins, and USDC, for example, mints a shitload of stable coins on top of Solana every single month or bi-weekly or weekly sometimes. So that's sort of number one. And number two is you need incredible companies like Ben's, like Solstice, moving and grooving in the space. And then, of course, you need user adoption. But if you have stable coins, you have liquidity. If you have the ecosystem catalysts like these great companies, and then you will get the third, which is user adoption. And then your ecosystem is off to the races. The momentum train has left the station. With that being said, and I know you touched a couple of them, but give me some, if you can, go walk me through Camino, Aave, Pendle. Of course, Athena is absolutely blowing up. Just how you guys work with these companies and how these companies in particular add so much to the Solana ecosystem.
Absolutely. So the Camino and Exponent side, those are the two. And what's really important, actually, let me address a broader point and then I'll focus in. So the broader point here is that when you launch an ecosystem or a protocol like ours within a certain ecosystem, it's paramount that you focus deeply on the chain in which you're working within. And so going deep into that stack with integrations, going deep into that stack of accruative value, that's where the 2 + 2 = 5 scenario starts to come out. And the only way to make that happen is if you really spend time with these other protocols and with these other ecosystems to make sure the most accruative value comes out of that system. So for example, when you go and you borrow and loop or lend on Camino with USX or EUSX or PTUSX from Exponent, you're starting to see market dynamics of credit markets naturally evolve in a very DeFi-oriented way with max optimized yields. On top of that, you start to have this new system, which is the PTYT system, separating the principal from the yield on Exponent, which I can't highlight enough. Exponent is a great partner. You're starting to get the most optimized yield outcome. You're picking apart the dynamics of that core yield-bearing asset to its core to optimize every single part of that asset in the market. And so I would recommend any user that comes on board, you can see in our deep DeFi section, there are lots of different ways, whether that's on Radium, Orca, Exponent, Camino, or others, you can start to see how to optimize different yield opportunities on top of the base rate. So it's a great place to store value during times of market trouble or market turbulence. But also on top of that, it's a great place to start exploring your own DeFi journey individually and start to say, okay, there's a lot of introductory videos online to walk through how to get involved with Camino, how to get involved with Exponent, et cetera on that front. And you mentioned Athena as well. Athena was one of the icebreakers to this model into the market that has expanded quite rapidly. And what was exciting to us was that when Athena had launched, Pendle was roughly the same size as Exponent was, and they grew in congruence together in a very rapid way. And so we're starting to see that same dynamic persist internally because of that PTYT system. Now, Athena's model as well was one of those things that we decided, we love the team over there. It's great what they're doing, but we really are focused on driving on-chain revenues on Solana in the early stage and also optimizing on the back end, whether that's regulatory, transparency, or the true delta neutral dynamic of the protocol itself. We want to make sure that all of the trades that are going through our system are matched to a delta neutral book, that we're not playing into too much of the looping and lending scenarios on the back end that just for boosted TVL numbers that we've seen some protocols exhaust. We want to make sure that it's fully transparent and battle tested. We challenge all of our partners on the institutional side that we do deep due diligence with to really pull apart our systems, which they have. And that's why we've gotten investments from the likes of Galaxy Digital, MEV Capital, Susquehanna, Oros, Bitcoin Suisse, et cetera, a lot of these institutional names, because they really pulled us apart and realized this is a safe haven for capital. So it's about the next stage, and that's about driving that transparency into these type of protocols itself. Because with the absence of this type of transparency, where the yield is sourced, where it's priced, how it scales, et cetera, it creates a massive structural barrier for any of the institutions to come on and adopt these type of protocols. So you need to build that trust factor more than anything.
Man, this has been an absolute banger. I've gone through everything I want to go through with you. Yeah. We're going to have you on for round 2 very quickly here. But is there anything else that we didn't touch on yet?
I was going to ask you, and I'd love to, we can do this as like a little live exercise as well. When you look at Solstice Finance, I'd love for you to as a first look, because I'm assuming you haven't invested in the protocol or anything yet. When you look at that type of protocol, I'm not sure if you even go to the website quickly and you just see it, what are some of the things right off the bat from a trust and transparency perspective that stick out to you? Because you're obviously very well educated in the crypto sector, so you're going to have a deeper dive look. But what I'm more focused on, and this is where we can kind of do a little exercise here if you want, all of the general global retail market that has never participated in this space before. What we need to do as an industry collectively is create an easier pathway for them to come onto these DeFi apps, understand it clearly. Exactly. We had a challenge to my whole team that said, during any times when there's holidays or whatnot, and when we come up for Thanksgiving, which is what I told them for, and Christmas, I said, your goal is if you're at a dinner table with 15 people, you should be leaving that table with 10 of them being onboarded into Solstice, even if it's with $5. Because if you can't explain it simply to your family members and they can't understand that core value proposition of what we're doing, even to put $10 in just to test it, then it's not simple enough, and we're not doing our job well enough to make sure that the entry point is as simple as possible. Yeah. Because the core dynamic is very straightforward. And so it's that simplicity, it's that onboarding, and we as a group of crypto and DeFi need to get away from how do we get our share of that mercenary capital that keeps fluctuating and circulating around from protocol and app to protocol. We need to be looking at global retail, net new capital, and bringing on new accretive value propositions to the market that's not already with us. That's the key thing that if I could leave a message for everyone that's working in crypto, that's what we need to work together to source. Whether that it's not just high yield numbers that are promised because of incentives that dry up after 6 months, and then there's no core utility and everyone pulls out and goes to the next chain. That game is over. There's a few protocols that are still pushing that on the market and TGEing. That game needs to be over for DeFi. It can't sustain that anymore. That's part of the reason why we're doing what we're doing in the way that we're doing it. There's opportunities all the time to have boosted TVL numbers. There's opportunities to loop and lend on our backside, so that way we can boost our core AUM number as high as possible. Those things only result in detriments to the trust and respect and level of bar setting for our DeFi industry. So that's how we're building Solstice. We want to make sure it's transparent to our ecosystem, and we love the community that has been part of it so far, which is all 25,000 plus unique USX holders and 800,000. I'll bet probably a lot of those are bots farming Flares programs out there, but I'm sure that's in the range of probably 100 to 200,000 real users on the Flares side. So we deeply appreciate everyone that's come on board for the journey, and we're going to continue to ride this one through.
Well said. Just to touch on your earlier point, a couple of things. I always go to the website. A clean website for me as a marketer and sales guy is sort of paramount. If your website is too complex, the landing page should depict and say what exactly you guys do. And then for something like this, whenever I'm giving someone my money, I want to do exactly this. I want to go see if the founder or C-suite exec has been on a podcast. Are these guys a bunch of JPEGs? Are they anons, or are they actual people going on podcasts and showing their face? I look at the Twitter. Is the Twitter legit? Is it scammy? How many, followers that I follow, people I trust follow them? All these types of things that really matters to me. And then above all else, the only main pain point that I see on your guys' onboarding flow is the same pain point that everyone else in crypto has been. And that's the wallet, where it's like, in order to participate, I haven't gone through the institutional route. So I'm sure you guys probably help them set up wallets and KYB and the whole 9 yards. But on the consumer side of things, the wallet is still very tough. And what I tell a lot of my friends is it's sort of like the equivalent of getting a smartphone, or sort of like the equivalent of finally using that viral social app, where this shit takes time. Like Facebook really, really didn't pop off till what, 2010, like it takes time for all these things to happen. Same thing with the internet. And hopefully before 2030, more than 50% of the world will have, a hot wallet that they can connect in their browser to use Solstice. But right now it's just, I have more friends that don't have wallets than do have wallets. And it's honestly, the number's not even close. And I'm sure it's the same with you. So that's still the main issue, where
Absolutely.
you can't just sign up like a piece of software. You need that wallet. And then that's where the questions come, like, okay, well, how do I fund my wallet? Well, you're going to have to use a centralized exchange. So these are the things that are still cumbersome.
Yep.
Sorry for the rants, but you guys did your job.
Spot on.
It's us who needs to do our job and educate the folks, tell them that it's really not that scary. Every day we get better at getting the scammers out. And as people get more wallets, DeFi will continue to grow. But that's my little rant there.
That's absolutely spot on. That's a lot of good feedback as well on that front. And also, I just realized we should probably list some of these great podcasts, and I'll make sure to put this one on the website as well as soon as possible. So for users like yourself who look for that directly, that's an important piece.
Appreciate it. Guys, what an epi. Ben was on fire today. Ben, before we let you go, can you please let our listeners know where they can find Solstice, and of course, you personally online and on socials?
Absolutely. So for all users, solstice.finance is our website. And in the top right corner, you'll see the click to the DApp, where you can one click connect your wallet and go with USX or EUSX. And for socials, you can follow us at SolsticeFi, that's Solstice FI, one word, on X, and as well as myself at Ben_Solstice on X as well. So recommend checking those out, and see a lot of exciting news coming through from us in the next couple months here. And also, there's one other side for any of the listeners that are in the staking business as well. Solstice also has our staking business at solsticestaking.io, where you can check out our services and offerings there as well.
Folks, that was an absolute heater. What a banger from Ben, CEO and co-founder of Solstice Labs. This was an absolute banger, guys. This will be one that I listen to again. Huge shout out to Ben and the team for making this happen. If you guys enjoyed this one, I hope you did. Please do subscribe. Hammer that like button. It would mean the world to my team and I. Speaking to the team, love you guys. Thank you so much for everything. And to the listeners, keep on growing those bags. Go touch some grass. And above all else, keep on staying happy, healthy, and wealthy. Love you guys, and we'll see you on the next one. Ciao.